Hello everyone. Welcome back to the channel. In this video, we are going to understand an important accounting concept called direct expenses and indirect expenses. This topic is very important for beginners because it helps in understanding how the trading account and the profit and loss account are prepared. Many students find this topic confusing because all expenses reduce profit, yet they do not appear in the same place in the final accounts. The reason for this difference is the purpose for which the expense is incurred. In this video, we will clearly understand that logic step by step. Meaning of expenses in accounting. In accounting, an expense refers to any cost incurred by a business in order to earn income or to operate the business. However, all expenses do not perform the same function. Some expenses help in producing goods, while others help in managing or selling the business. Because of this difference in function, expenses are classified into direct expenses and indirect expenses. Meaning of direct expenses. Direct expenses are expenses that are directly connected with the purchase, production, or manufacturing of goods. These expenses are incurred until the goods become ready for sale. If these expenses are not incurred, the goods cannot be produced or brought into a saleable condition. Direct expenses increase the cost of goods and therefore affect the gross profit of the business. Logic behind direct expenses. Direct expenses are incurred during the stage when goods are being produced or brought into the business. They are closely related to the goods themselves. Without these expenses, the business cannot create goods or bring them into a usable form. That is why direct expenses are treated as part of the cost of goods. Examples of direct expenses explained clearly. Carriage in words is the transportation cost paid to bring purchased goods into the business premises. Factory wages are wages paid to workers who are directly involved in the production of goods. Power and fuel used in the factory are necessary to operate machines and carry out manufacturing activities. Factory rent is the rent paid for the place where goods are produced. Import duty or octroi paid on purchases is a cost incurred to bring goods into the business. All these expenses are incurred before the goods are ready for sale and are therefore classified as direct expenses. Meaning of indirect expenses. Indirect expenses are expenses that are not directly related to the purchase or production of goods. These expenses are incurred to run, manage, sell, or administer the business. They are incurred after the goods are ready for sale. Indirect expenses do not increase the cost of goods. They reduce the net profit of the business. Logic behind indirect expenses. Indirect expenses support the overall functioning of the business. They cannot be directly linked to a particular unit of goods. Since they do not form part of the cost of goods, they are not included in the trading account. Indirect expenses are shown in the profit and loss account. Examples of indirect expenses explained clearly. Office rent is paid for administrative purposes and does not help in producing goods. Office salaries are paid to staff who manage the business operations. Advertisement expenses are incurred to promote sales, not to produce goods. Carriage outwards is the transportation cost paid to deliver goods to customers after sale. Office electricity is used for office work and administration. Depreciation represents the reduction in value of assets used in the business. Practical example of indirect expenses. Suppose a business spends 15,000 rupees on advertisement, 20,000 rupees on office rent, and 25,000 rupees on office salaries. These expenses do not affect the cost of goods. They are incurred to support the business operations and therefore reduce the net profit. Where they appear in final accounts. In final accounts, expenses are shown in different places depending on their nature. Direct expenses are shown in the trading account. They are added to purchases or cost of production. These expenses help in calculating the gross profit of the business. Indirect expenses are shown in the profit and loss account. They are deducted from the gross profit. These expenses help in calculating the net profit of the business. This placement is very important because it shows how much profit is earned from core trading activities and how much profit remains after meeting all business expenses. Key difference based on purpose and timing. Direct expenses are incurred before goods are ready for sale and their purpose is to produce or bring goods into the business. Indirect expenses are incurred after goods are ready for sale and their purpose is to manage, sell, or run the business. Understanding this timing and purpose makes the classification very clear. Common confusions explained. Wages paid to factory workers are direct expenses because they are related to production. Wages paid to office staff are indirect expenses because they are related to administration. Electricity used in the factory is treated as a direct expense. Electricity used in the office is treated as an indirect expense. Rent paid for factory premises is a direct expense. Rent paid for office premises is an indirect expense. The name of the expense does not decide its treatment. The purpose of the expense decides its classification. Golden rule for easy identification. Always ask whether the expense is required to make goods ready for sale. If it is required, it is a direct expense. If it is not required, it is an indirect expense. This simple rule works in all situations. Final conclusion. Direct expenses are incurred to produce or purchase goods and are shown in the trading account. Indirect expenses are incurred to run and manage the business and are shown in the profit and loss account. Once the purpose and timing of an expense are understood clearly, this topic becomes easy and logical. Thank you for watching this video. If you found this explanation helpful, please like, share, and subscribe for more clear and concept-based accounting lessons. See you in the next video.